In this video today, I'm going to go over my price projections for Amazon. Now, Amazon came out with earnings. They did very well, but a lot of it has to do with cost cutting. And when you start cost cutting, your profits margins increase. What I'm looking at is Amazon's, the flow of money into Amazon sustainable going forward, and where in a recessionary environment, and folks, we're in a recession. Just they're not going to tell you that in the government because that does not get people elected. And that's what this administration is all about, getting reelected. Until they get reelected or a new administration comes in, will they actually say, we've been in a recession? Typically 6 to 9 months after that happens. So I'm looking at Amazon because it's a consumer driven company. Now, I know they offer web services, and that's what took them from, poverty to in riches because of opening up that web service element. But I'm looking at this from the perspective of global money funneling in to Amazon. And where is it coming in or is it going out? And what is the consumer doing versus what the stock market is telling us? This is Amazon's daily chart. So I'm going to take you through the daily, the weekly, and the monthly, and I'll give you my price projections on Amazon as over those times. So first of all, this is Amazon today at 10:14 a.m. Central Time. It is presently, after reporting earnings yesterday, it is presently down 1.85% or $3.28 after a bad day yesterday where it was down 3.29%. So what I'm looking at this, and please understand, I believe there is a place for fundamental analysis. There's absolutely a place for it. But over the last 25 years, because of the internet, because of high-speed frequency trading, we have seen a great change in what markets are doing in comparison to earnings. And so with Amazon, I'm looking at this and I'm going, on a daily basis, this stock has been trading below its 20-period moving average since April 17th. It broke lower. It hit his high of $187, or excuse me, $189.05 on the 11th of April. And then it has only gone down, broke through the 20. That should have been an indicator to you and I and whoever else on a daily chart that this stock broke through the 20, closed through the 20, and is now headed lower. Okay, so then it breaks through the 50, closes below the 50. This should be red flags all over, and that was on April 19th. Then it may move back up over the 20 on the 29th of April, which was the other day, what was that, Thursday? Well, anyways, broke above that, but closed below it. And since then, Monday, the 30th, end of the month, or end of the month on Tuesday, I'm getting my dates mixed up a little bit, apologize. But now today, after earnings, great earnings, but think about it. They cut, they spending, they cost cut, and they had great earnings. Who else? Who isn't going to have great earnings? But what you saw was a resistance level right around the 20. And that was your indicator that, yesterday and the day before, that Amazon was up against sellers. People were taking money out. The people in the know, the institutions in the know. They know where these guys are going to come in. They know how they're going to get to their earnings. They have the resources. They have the connections. It's just how the world works. So when you look at this chart, which you should be looking at this chart, and it should be saying to you before earnings, one, you don't buy it before earnings because who knows what's going to happen, right? You've seen that with Tesla. You've seen that with Meta here recently. You've seen that with Google. Wait for that to work out. But what I see here today is Amazon is bulk. Most likely will close below the 20. That is a trend, a trade kind of perspective. 20 days or less is a trade perspective. Closes below that. It's now going to close below the 50, it looks like. If it were to close right now, it could hold up above the 50, which, may institute hope. We'll see. But I look at this and I go, Amazon is running out of steam because the global economy is running out of steam, because even though they say the economy is doing well, it's not. It's more expensive for you and I to eat, to travel, to go to work every day. It's more expensive for employers, this, that, and the other. And that's why you're seeing people laying off. That's why small businesses, 43% of small businesses in the United States are in trouble. They're not being able to pay their rent. They're having to cut back because of the cost. All of that weighs on us. That all weighs eventually on stock prices. And that's what we're seeing here. So where do I think, when I look at this, I'm looking at the 90-day, which is that pink line. I look at 90 days because that's 3 months. That's a quarterly look back. And that gives me indication that if this stock, Amazon, were to come down to its 90-day, which would be right around 169.59 and held up there, then there's a little bit of hope. But with the economy doing what it's doing, it's telling me the consumer is getting tight, and that's going to filter into second quarter earnings. And we're going to hit an environment of third quarter of stagflation. If you don't know what stagflation is, go back and look up the 1970s and the economic conditions of the United States, and it'll give you a whole new perspective of where we are at in this country. So from a consumer being able to spend money, I think Amazon is headed. Now, the first level of support, in my opinion, is that 161.12, $161.12. There is a gap there. You saw that created back on February 1st of 24. It moved up. Gaps eventually get filled. I think this gap will get filled. That's your first stop, in my opinion. Let's go out to a weekly chart. This is a weekly chart looking at this. All right, so a lot of squiggly lines here. Okay, on a weekly basis, we're still above the 20. That's 20-week period looking back. To me, weekly charts are essential when looking at the direction of a stock. Right now, you have a situation where we had a big down week of April 15th. We had a recovery a little bit of the week of the 22nd, and now we're into a third week of, once we see a closeout of this week, we will see where it lands, but I believe we'll see a lower closeout, especially since the Fed is going to speak here today at 1 Central. And right now, that's the week of the 29th. 161.12 is my first level of support here. If that breaks through, you got the 50 and the 90 in this, or 50 and the 200 actually in this, that could be a level of support. But I think based on just simple 25% retracements, 50% retracements, and 60% retracements on a weekly chart from the lows to the highs, these are where I think support will become. So at 135.11 on a weekly chart, this is where I see it happen. There's a lot of back in January of 22. You saw on the 18th of 22, there was, January of 22, January 24th, 22. Man, I can't get my words right today. You saw a dip or a hit there, moved back up, eventually broke through. So it broke through that level. The next level after the breakthrough or the hit on January 24th of 22 went back up to the 161.12 range. It came back through and eventually then broke through the 60% retracement, which was on April 25th of 22. It bounced around and eventually this thing bottomed out the week of January 3rd of 23. Okay, it then made a move higher, roughly $100 and some move higher. And I took just simple math, 25% retracement is the white line, 50% retracement is the green line, and then 60% retracement is the orange line. So 25, 50, 60. I took that gain from the week of January 3rd of 23 to the peak peak closeout of April 8th, 24. And I did my math and subtracted from the top to the bottom. And this is where I'm coming up with this. This is a no emotional way of approaching this. I'm looking at my different 20, my 50, my my 90 and 200 period moving averages, and what I'm seeing is there is a collection in this area around the 50% retracement at 135.11. Now, a lot of support there. We saw that back from July of 23 until it bumped above in November of 23. We saw a bit of support in that area here, blah, blah, blah. You can get what I'm, you see what I'm looking at. When I look at my MACD on this one, it's going through. This is a weekly chart. It's going through. It's headed south. Chances are that's going to continue. My RSI broke below 70. It's now at 62.13. I think that's going to continue. My stochastics, same thing. This is all tactical, folks. You approach markets and stocks with tactical approach, you're going to save yourself a whole lot of heartache and money. So what am I looking for now? I'm looking for a closeout of where this market closes out this week. Okay. This is that April 29th week. Okay. And I'm looking for a breakthrough the 20. If it holds up on a weekly chart of 20, then there is potential hope there. And what if I'm looking at this from a long-term or intermediate to long-term perspective? I want to see it blow through, break through, and close above this 187.21 mark, because it just could play around in this area right now until something big happens. What would drive Amazon higher is the question you have to ask, and that is the consumer spends more money, the consumer gets out of its debt burden, the country starts to lower the cost of money, borrowing money. People, those are things that have to happen for the consumer to spend money. They have to pay down their debt. They have to have the ability to buy things or borrow money at a cheaper rate. They're not getting it right now. And chances are the Federal Reserve, because of inflation numbers, because of unemployment numbers, two things of the three they really look at are actually, going against the hopes of a higher, lower rates. And so chances are, I wouldn't be surprised if they actually raise rates in the coming, 6 to 12 months or so. If they do that, this thing will come down to these support levels, if not lower. There's a better opportunity with Amazon to buy at a lower rate. Let this peak rise, play out, and deploy your money when it's right. Use tactical approach. That is what I believe in. This fundamental thing, it hasn't worked in like 25 years because of the internet, because of high-speed trading, because of algorithms. They're looking for movements. And you see this move, and you as an investor, you can apply these tactics on and apply them on a weekly basis and review your portfolio. Take you probably 15 minutes to look at the charts and do this. Or you could subscribe to the Best of US Investors and we can help you do that. I'm building this ETF trend tracker, and I'm going to launch it in the next week or two. It's going to be $14.95, and this tracks 4,000 plus ETFs and looking for trends using the tactics that we have built at Best of US Investors. I want to get that to you because I know you're working hard. I know you're doing stuff. I know you're busy with family, and you got all these pressures as the parents of a household or the head of a household or just your household. I want to make it easier for you. Best of US Investors wants to make it easier for you. So look for this launch of the ETF Trend Tracker. It is a weekly newsletter that'll come out, and it tracks the best trending ETFs where money is flowing, because that's what drives these markets. Money flowing in, money flowing out. It's like a river. You think you can move a river, you redirect a river, water will go where it's going to go. It's the same thing in the stock market. So look at the water in the stock market. Look for where money is flowing, and that will make you a better investor and more tactical investor. Don't get emotional. Have a process. Do the process, and initiate it, and monitor it, and build it. best of U.S. investors, join the Platinum channel. Look for the ETF tracker coming out here in the next couple of weeks. $14.95, that will be for, it says subscribe. You can cancel anytime, but this will give you the basis of building your wealth in your future. Live loud.